Welcome to your Ag Empire, and today I want to discuss something that everybody has in their mind, and that is, do I sell them, do I keep them, or do I just stay right here, play limbo, and hope that the market stays up? That is one of the biggest things, and I think I hear all day, every day from ranchers all over the country that we're staring at record high prices, an opportunity, depending on the age, an opportunity to possibly retire. And they really just are stuck on what do I do? Now, I think a lot of things come into play here, and we're creatures of habit. In 2015, we saw the markets run up with a swift fall. And when it fell, it went to the 30-year average of $1.34. And everybody said that would never happen, and it did. And what do? We spent 7 years of pretty much breaking even, making a little bit, just barely enough to debt service. And now a lot of folks are 10 years older. So if you were 50 and you lived through that, you didn't make a whole lot of cash, but you've got your assets still. Maybe they're a little aged. You're trying to figure out, what exactly do I do? What do you do? Do you liquidate these cows and calves, capitalize on, let's just, for easy math, let's just call it $5,000. And then what are the capital gains implications? What does the tax code give us and as tools that we could possibly use in order to minimize what that is going to be? So I think all of these things are definitely some situations that we need to look at. Is there a next generation that's wanting to take over? Maybe it's not in your family. That's something to be discussed. At this stage, you've busted your tail. You're 50 to 70 years old. You're kind of tired, and you want to get out. So what does that look like? Could you work out some sort of an owner finance type situation with someone? There's a lot of opportunities out there. There's a lot of young people that want to get in. They don't have access. And so the other thing is guys, some of you borrowed money. You borrowed money in the last 10 years, and you've still got to pay that back. So the idea of selling everything may seem great on the surface. Let's just say you've got 500 cows, and those 500 cows, you sell the calves, the cows, everything. Let's just say that you end up with $2.5 million, and maybe you bought some ground, had to upgrade a few pieces of equipment, a pickup, feed wagon. You name it, but you've got all this stuff sitting there, and you owe about $750. So let's take the $2.5 million. We're going to drop it down. But what's that going to leave us with? That's $1,750,000, and we're going to pay tax on it too. Long-term capital gains, short-term capital gains. We're going to kind of have a mixture. Let's just say 30%. So we're going to have to pay $750 of that. So we got rid of our debt. Now we got to pay another $750, and you're going to come out with $1 million, $1 million bucks. I think sometimes we can look at some ways to structure, and I think this is where it's really neat if you've got a good-sized operation where we can set up some structures. I utilize some friends of mine. We have created some investments for an individual like yourself where you can get some tax credits, some write-offs that are going to help you as you transition that on to the next person. Do you sell the cows, or do you keep them? And it goes back to the markets. Are you scared enough you think the market's going to fall apart? Well, I'm going to tell you, I think fundamentals are still there where this cow herd's not going anywhere. We're not gaining back cattle like everybody thinks. If we're holding back 20 heifers or 200 heifers, I can promise you the same number of cows are going to town. And we're just using those as cash flow to keep a younger herd in the mix. We're going to keep those heifers and just to replace those cows, but we're not rebuilding this herd, in my opinion. Where we're keeping everything afloat and it's not a teetotal wreck is the fact that everybody's getting these cattle bigger. We used to finish these cattle at 14 a quarter, 14.75. I don't know that I've seen many loads go out that were less than 15.50. That extra 150 pounds we're putting on every carcass that's out there, that is the big, big difference in what we're seeing. Guys, if you want to keep this price high, keep current on your feed inventory on your cattle that you've got in the yard. Make sure that you get them out of there, get a profit on them, and get another set. If everybody would do that, that'll stay the same. Now, what are the fundamental things that could derail this? Well, we start getting more imports. Then the packers don't have to buy our cattle. I think Trump's setting up everything to where that may not be an issue for us. And we may end up seeing this thing continue to go up. We've never seen anything like this. Demand has been strong, but if we fall into a pretty heavy recession, a lot of people losing their jobs, you're going to see demand start to slide. And when the cold storage starts to build and you start to see these cattle offers flip from a positive basis, they're begging you to take their price rather than you begging them. That's going to shift this market. And that's when you're going to probably see us take 70 to $1 off of it in a hurry. And depending on how we're set up, it could cripple a lot of ranches. This year, like we are rebuilding balance sheets. We are healing up, paying debts that are down. And listen, ranchers are typically not heavy debt like row crop farmers are. Row crop farmers, I'm sorry, but you guys have a lot of machinery and addiction to iron, and that plays a role. It plays a role whenever we're sitting here digging through the weeds on where's our profitability go. There's always been fewer. The margins haven't been there for us in the cow-calf sector. And then if you had a cow-calf sector running a few yearlings and you tried to supplement and get your income built up there, and that's what a lot of guys did. But that has shifted. It shifted big time in the last little bit. So I think it's a great time if you're thinking about selling out. But I would encourage you to truly dive into your numbers and know where you are. Know where your profit margins are. Know what your cost basis is and what your tax liabilities are before you pull that trigger and you do something stupid. I hate for you to work 30, 40, 50, 60 years and you sell those cows only to come out with pennies. Maybe you still got your ground, but I always look at it this way. If I can figure out a way for you to save tax money, help a young guy get in and take over that operation, 9 times out of 10, that's the way that I would prefer to go. Let's set up another producer to take your shoes and roll on. Now, you're not giving them anything, so it's not that. It's not giving them. You're giving them an opportunity, and it's up for the young person to seize that and to work through that. So, guys, I know it's not long, but I'm going to tell you, you really need to evaluate and kind of have that idea of what you want to do when it comes to marketing. You've got an opportunity here, and you may not want to continue to play this game because it is extremely high. There's a lot of guys that bought some $1,000 cows that are worth 3 to 5 now. You figure out where you want to be in this industry, and if it's time to retire, that's okay. Don't second guess it. But if you want to stay in, I encourage you to look at your profit margins now. Like, yes, big profits make for wasteful spending. We've all seen an oil boom, and what happens in that time frame is the oil companies are slinging money left and right. It doesn't matter what happens, and then when it dries up, they start tightening up, and all that goes away. And I don't want to see us as cattlemen do the same thing during a period like this. I mean, it's a gift. We've needed it, and we need about 2 more years of it to heal up from the last 7 that were behind us. So, guys, I encourage you, be looking at that, be thinking about that. There's creative ways to do all of this. There's creative ways that we can structure things that protect you, allow you to step out of the business, but still maintain a little bit of equity and control. Maybe we got to come up with a way that you can get the money that you need. It just may be spread out over a little bit of time. And there's ways that we can protect that as far as the LRPs and the trading. There's lots of tools that we need to be utilizing that we can still lock in some good prices. It's just like the other day, I had a guy ask me about buying some 3750 heavy bred cows. Well, when I can lock in a $3,000 calf in April, that's a pretty cheap cow. I mean, while everybody's scared to death because you're spending more money, you are. The stakes are higher than they've ever been. You're having to borrow more money than you've ever had to borrow. Profit margins are bigger than you've ever seen in your life. And that scares a lot of people. There's a lot of people sitting on the sidelines, but I've also got a lot that have capitalized and done very well. So with that, guys, I'm going to tell you, look through, know your financials, have a 5-year plan, a 10-year plan. Don't sit and wait for the market to come to you. You need to go to the market. You need to figure out where you want to fit in for the next 5 years. If there's anybody young in that area that wants to take over, or if you're trying to find somebody to take over, reach out. We've got guys all over the country that are looking for opportunity, looking for something. that they can raise their families on. It's been hard to put it together, between development and everything that's out there. It's just been tough to move forward for a lot of these young guys that are in their, late 20s, early 30s, maybe even mid 30s. And they want to get big enough that they can actually make a true blue living out of. Guys, be good at it. We'll catch you on the next one.